Shauna Benoit here, and today we're going to go over the USDA Loan Contingency Exhibit, which is the F413. This exhibit is part of the agreement with an offer date of for the purchase and sale that certain property known as application. Buyer shall promptly apply for and in good faith seek to obtain the United States Department of Agriculture, USDA Rural Development Loan or loans described below, such that buyer can fulfill buyer's obligation hereunder prior to expiration of the USA-RD loan contingency. Select below all loan items must be filled in order for this to be part of the agreement. A, first mortgage, loan amount, percentage of sales price, term in years, interest rate not to exceed a certain amount. The rate is either fixed or adjustable. So what does this mean? Buyer must apply quickly. Buyer must act in good faith. Buyer cannot intentionally sabotage the loan process. Loan term sections required. The contract requires the loan amount in percentage of sales price, the loan term in percentage of years, interest rate, the maximum allowed, fixed or adjustable rate. All blanks must be filled in. If not, the contingency can be unclear and unenforceable. Section 2, use of particular lender. This says buyer may apply with any licensed Georgia lender. If an approved lender is listed, buyer must apply with at least one of them, but buyer is not required to close with that lender. 3, length of financing contingency period. This is the number of days the buyer has to secure financing. It starts from the binding agreement date. If buyer cannot obtain loan within the time frame, they must terminate properly or they lose protection. Length of time for buyer to request a reduction in the sales price based upon a low appraisal. This gives buyer a specific number of days to request a price reduction if appraisal comes in low. This is separate from the financing contingency. 5, buyer may apply for different loans. Buyer can apply for different loans, but they cannot terminate unless they are denied for the specific USDA loan described in Section 1. You cannot intentionally apply for a different loan and use that denial to escape the contract. 6, buyer to notify seller of intent to proceed. Buyer must notify seller which lender they are moving forward with. This creates transparency. 7, financing contingency. This is the heart of the exhibit. Buyer is deemed approved unless both happens. Buyer sends written notice of termination before the contingency expires. Buyer provides a loan denial letter within 7 days. Loan denial letter requirements. Must state reason for denial. Must meet underwriting standards. Must come from approved lender if one is listed. The denial letter can be delivered after contingency ends if the 7-day notice period extends beyond it. A mandatory clause exception. Buyer's USDA amenatory clause rights survive even after financing contingency expires. 8. Use of approved lender and loan denial letter. If approved lender listed, denial must come from them. If mortgage broker, denial comes from broker or underlying lender. What cannot be used as a valid denial? Buyer cannot terminate based solely on not having enough closing funds other than loan amount, not selling another property unless contract says so, failing to provide required documents, making new purchase hurting their DTI or debt to income, failing USDA occupancy requirements, lender simply not finishing underwriting. Buyer must cooperate and act in good faith. 9. Special approval if property is a condominium or subject to a master insurance policy. If property is a condominium or covered under master insurance policy, then lender must obtain project approval. If lender cannot obtain approval, buyer can terminate. Buyer gets earnest money back, must provide lender letter stating project approval failure. The deadline is before closing or within 7 days after termination if notice is given before closing. Section 10, right of seller to request evidence of buyer's ability to close. If financing contingency expires and buyer hasn't terminated, seller may request written evidence of buyer's ability to close. Acceptable evidence, loan commitment letter stating the type, the amount, the term, funding conditions. Buyers have 5 days to provide it. Seller cannot request it within 5 days of closing. 11. Seller's right to terminate. If buyer fails to provide evidence, seller gives notice of default. Buyer has 2 days to cure. If not cured, seller has 7 days to terminate. If seller doesn't act, the right is waived. 12. Authorization of buyer to release information to seller and broker. Buyer allows seller and broker to communicate with the lender about the loan status, buyer's financial ability, whether documents were provided, conditions remaining, basis of denial. This increases transparency throughout the loan process. 13. Miscellaneous. This clarifies a mortgage loan is secured by deed to secure debt. First versus second refers to the lien priority. 14. Appraisal contingency. Buyer must have lender order appraisal. Provide seller a copy of it if it's low. If appraisal is lower than purchase price, buyer may submit amend to purchase price, which is the F713. Must do so within the time frame in section 4 on page 1. If buyer does not submit the ATPP amendment to purchase price, appraisal contingency is waived. Seller response timeline. Seller has 3 days, but not later than 2 days before closing to accept the offer, reject the offer, or counter. If no agreement reached, buyer has 3 additional days, but not later than 1 day before closing to terminate. If buyer does not terminate, they must close at the original price. Buyer is not required to seek a reduction. If they don't ask, they must close at agreed upon price. 15. Right to terminate if government funding allotment is used. The USDA loans are federally funded. If funding runs out, buyer or seller may terminate, no penalty, earnest money refunded. This protects both parties from federal funding shutdowns. 16, loan guarantee fee. Guarantee fee is a percentage. It can be option A, paid at closing by buyer or seller. Option B, financed into the loan. If financed, monthly payment increases. 17, home warranty requirements. If property is less than 1 year old, seller must provide USDA acceptable home warranty if required by USDA. Buyer signature here, buyer 1, buyer 2. If more than 2 buyers, attach the F267. Seller signature here, seller number 2 signature here. If there are more than 2 sellers, attach signature page 267. The buyer's brokerage signs here, the seller's brokerage signs there. And this concludes the F413 USDA loan exhibit contingency.